Welcome to Moneyhack, the place where we transform your understanding of personal finance and help you master the world of investments. Today, we have a hot topic that continues to grab headlines worldwide: Bitcoin. Have you ever wondered what Bitcoin is? Why has it grown so much? And how is it possible that a simple cryptocurrency, created over 15 years ago, has had such a massive impact? If you're looking for answers, you're in the right place. In this video, we'll dive deep into the world of Bitcoin, breaking down how it works, its history, its volatility, and whether it's really a safe investment for you. Throughout this video, we'll cover everything you need to know about Bitcoin, its opportunities, its risks, and how it could fit into your personal financial strategy. So, if you've ever felt lost among all the technical jargon, or if you simply want to learn more about this financial phenomenon, stick with us. Let's start with the basics. What is Bitcoin? To understand Bitcoin, we first need to grasp its essence. Simply put, Bitcoin is a cryptocurrency or digital money. It was created in 2009 by a person or group under the pseudonym Satoshi Nakamoto, a name that still generates mystery in the world of cryptocurrencies. But why is it so special? Unlike traditional money, Bitcoin is not controlled by a government or a central bank. This is one of its biggest advantages. In the traditional financial system, banks and governments control the flow of money, its value, and its regulations. With Bitcoin, there is no central authority managing it. Instead, Bitcoin operates decentrally through a global network of computers, also known as nodes. But how exactly does this network work? Well, Bitcoin is based on a technology called blockchain. Blockchain is a public, transparent, and secure digital ledger that records all Bitcoin transactions. Every transaction, whether it's a purchase or sending coins to another person, is stored in a block. Then, that block is linked to other blocks, forming a chain that is accessible to anyone on the network. Why is blockchain important? Because thanks to it, Bitcoin transactions are secure, verified, and transparent. There's no need for an intermediary like a bank to verify whether a transaction is legitimate. Every transaction is validated by the network of participating computers, making the system resistant to fraud and tampering. Additionally, blockchain ensures that transactions are irreversible. Once a block is added to the chain, it cannot be altered or deleted, which adds an extra layer of security. Now that we understand how it works, let's dive into why Bitcoin has gained such relevance in the financial world. Looking back, Bitcoin has had an incredibly volatile history, but it's also shown impressive growth. When Bitcoin was first launched in 2009, its value was almost negligible. In fact, in its early years, you could buy a Bitcoin for less than $1. But something changed, and that small cryptocurrency went from being a digital experiment to one of the most coveted investments in the financial world. So why did this happen? First, we need to talk about its scarcity. In the world of cryptocurrencies, Bitcoin has a unique feature. There will only ever be 21 million Bitcoins. This strict limit creates a sense of scarcity similar to gold. The supply is fixed, which means that as more people become interested in Bitcoin, demand also rises. And as with any limited asset, when demand increases and supply stays the same, its value tends to go up. This principle of programmed scarcity is behind much of Bitcoin's value. There's no way to create more Bitcoins beyond the 21 million set in its source code. As more people discover and understand this principle, more people want a piece of Bitcoin. But it's not just the scarcity driving its value. In recent years, Bitcoin has begun to be accepted by companies and governments around the world. Big companies like Tesla, PayPal, and Square have started accepting Bitcoin as a form of payment. This, in turn, has validated Bitcoin as a legitimate currency in the global market, and its value has reflected this adoption. But there's more. Many investors view Bitcoin as a type of store of value, similar to gold. This is because, unlike traditional currencies, Bitcoin isn't tied to any country's economy or government policies. As a result, Bitcoin is seen as a hedge against inflation and economic crises. In times of uncertainty, when traditional currencies lose value due to government economic policies, some people seek refuge in Bitcoin. In summary, scarcity, global adoption, and its growing reputation as a store of value are some of the reasons why Bitcoin has grown so much in value. But Like everything in life, it's not all that simple. Despite its impressive growth, Bitcoin remains incredibly volatile. Now that we've talked about the reasons why Bitcoin has grown so much, it's important to touch on a crucial topic that not all investors consider: the risks involved in investing in Bitcoin. While many see this cryptocurrency as a great opportunity, there are several factors that make investing in Bitcoin a risky game, even for the most experienced investors. The first thing we need to keep in mind is volatility. The price of Bitcoin has shown a trend upward, but it's also suffered massive drops. If we look at Bitcoin's price history, we'll see that it has experienced huge fluctuations. In 2017, for example, Bitcoin's price reached almost $20,000, only to plummet to below $4,000 shortly after. This is something that investors need to fully understand. Bitcoin is not a stable asset. While you might see significant gains in the short term, you could also face significant losses very quickly. In addition to price volatility, there's also the lack of regulation. While some countries have adopted Bitcoin and other cryptocurrencies as a legitimate form of payment, many regions still consider it a gray area. The lack of regulatory clarity means that at any time, governments could impose severe restrictions on its use or even ban it entirely. If this were to happen, investors holding Bitcoin could see its value drop dramatically in a short period of time. Another factor to consider is security risks. If you don't take the necessary precautions to protect your funds, you could lose your investment. Bitcoin is stored in a digital wallet, which is essentially a series of cryptographic keys. If you lose access to your wallet or your private keys, there is no way to recover your money. Unlike traditional banks, there is no customer service line you can call for assistance. If you forget your password or lose your private key, the Bitcoins in that wallet are gone forever. Along with that, scams in the world of cryptocurrencies are unfortunately very common. Scammers have found Bitcoin to be fertile ground for deceiving unsuspecting people. There are numerous fraudulent platforms, exchanges that disappear overnight, and scams that promise high returns in exchange for investments in Bitcoin or altcoins, cryptocurrencies other than Bitcoin. The lack of regulation and the anonymity of Bitcoin transactions make scams harder to detect and report. As for the environmental impact, many critics of Bitcoin point out that the mining process, which is how new Bitcoins are created and transactions are validated, consumes a massive amount of energy. Bitcoin's mining system is based on the concept of proof of work, where miners compete to solve complex mathematical equations. This process requires enormous amounts of electricity, which has raised concerns about the environmental impact of Bitcoin mining as its adoption grows. In conclusion, while Bitcoin has proven to be an incredibly valuable asset for many, it also carries substantial risks. If you decide to invest, it's essential to do thorough research and take the necessary precautions to protect your funds. Remember, never invest more than you can afford to lose. Volatility is real and the risks are high. Now that we've discussed the risks, let's look at how you can start investing in Bitcoin if you decide it's right for you. Despite the risks, the growing popularity and potential for profit continue to attract millions to this market. If you're considering investing in Bitcoin, there are several key steps you need to follow to ensure you're starting on the right foot. The first thing you need is to create a digital wallet. As we mentioned earlier, Bitcoin is stored in a digital wallet. This wallet is essential because it allows you to send and receive Bitcoin, as well as store it safely. There are different types of digital wallets: online wallets, mobile wallets, hardware wallets, physical devices, and paper wallets. Hardware wallets are generally considered the most secure, as they store your private keys offline, making them less vulnerable to hacks. However, they are more expensive than online or mobile wallets. If you choose to use a hardware wallet, you'll need to purchase it from a trusted provider and follow the setup instructions carefully. Once you have your wallet, the next step is to acquire Bitcoin. There are several ways to buy Bitcoin, but the most common method is through a cryptocurrency exchange. Exchanges are online platforms where you can buy, sell, and store cryptocurrencies. Some of the most popular exchanges include Coinbase, Binance, Kraken, and Gemini. When you create an account on one of these exchanges, you can buy Bitcoin using traditional currency, such as dollars, euros, or any other local currency. Before choosing an exchange, it's important to verify its security and fees. Make sure the platform is trustworthy and has good security measures to protect your funds. You should also pay attention to the transaction fees, which can vary between platforms. Some charge very low fees, while others may be significantly higher, which will affect your profit margins. It's important to understand that, just like with any investment, you should never put all your eggs in one basket. Diversifying your investment portfolio is key.